The China Global South podcast is supported in part by the Africa-China Reporting Project at Wits University in Johannesburg and by our subscribers. Thank you. If you'd like to subscribe for daily news and exclusive analysis about every aspect of China's engagement in Africa, Asia, and throughout the developing world, go to ChinaGlobalSouth.com/subscribe.
Hello and welcome to another edition of the China Global South podcast. I'm Eric Olander in Ho Chi Minh City, and as always, I'm joined by China Global South's managing editor, Cobus van Staden, in Berlin, Germany, for just one more week before returning home to Johannesburg. A very good afternoon to you, Cobus.
Good afternoon.
Cobus, for the past few weeks since the Belt and Road Forum took place in Beijing, we've been spending a lot of time trying to figure out where this thing goes from here. We've heard from the Chinese that they are embarking on a new era. We've been talking about, at least for the past year, this new small is beautiful, smaller beautiful, small and beautiful. I don't know what it is, but small/beautiful phase, which is a much more streamlined Belt and Road, focusing on technology, connectivity, green energy. The days of the big roads are gone. However, though, we've also been hearing from some of the research that's been coming out that those days may not be over depending on where you are in the world. There's a lot of questions right now about the future of the Belt and Road, and this comes at a time of heightened geopolitical competition with the United States that through their own PGI and Europe's Global Gateway Initiative are now starting to ramp up their own spending. So it's just very interesting right now that this is the topic of the day, is trying to figure out where this thing is going. We got a very clear indication, probably the clearest indication, with AIDData's new report that came out last week that looked at 21,000 projects of the Belt and Road over the past 20 years and provided us with some forecast, some insight as to where they're going from now. That AIDData report, combined with a lot of the messaging coming out of research institutes and people who attended the Belt and Road Forum, all seem to say the same thing, that any predictions of the Belt and Road's demise are vastly overstated and way too premature.
Yeah, absolutely. I think it's time to rethink our assumptions about the Belt and Road. Not only this narrative that it's winding down, but also a lot of the other kind of assumptions of how the Belt and Road works, where it's targeted, and even for example, the lenders that are primarily driving it. I think all of those things have shifted over the last few years. And, it's important to really kind of take a temperature check of where the Belt and Road is exactly right now.
And remember when we talked to Amar Malik from AIDData, and if you didn't hear that interview from last week, please, that is a must-listen interview because he talked about, again, these 21,000 projects that they looked at. And what he revealed to us was that in many ways, the Belt and Road is optimized for the current environment that it's in. So we've been talking a lot about environmental, social, and governance issues, and that the Chinese need to raise their game on that. What we are finding out, though, is actually they've not compromised the amount of time that it takes to deliver projects. So Amar was telling us that the average project duration, I think when they start a project in the West, is 7 years. And the Chinese, it takes 3 years, even with the higher ESG standards. And so this comes back to the fact that the Belt and Road doesn't seem to have any shape to it. There is no department of the Belt and Road. There is no master plan to it. So it's kind of like an amoeba that just is a blob that evolves. And what we're going to do today is try to put the shape that it's in now. This thing is going to be different in 6 months, in a year from now. And to help us do that, we're thrilled to have on the show for the first time Chim Lee, who is a China analyst at the Economist Intelligence Unit based in Beijing. He has been following a lot of what's been happening with the Belt and Road. He was on the sidelines of the Belt and Road Forum in Beijing, and he was also the lead author of the China Going Global Investment Index 2023 that EIU put out, and it's subtitled The Belt and Road Initiative's Second Decade. A very good afternoon to you, Chim. Thank you so much for joining us.
Very happy to be here.
It's really great to have the chance to speak with you. You're going to be our Sherpa today. climbing the mountain of the Belt and Road to try and, again, figure out where we're going. So you were at the Belt and Road Forum. Let's start there. It was a few weeks ago. We've had time to let this thing digest. What was your takeaway in terms of what they accomplished, what were the messages, and what were the clues that you got as to where this is going? And then what are you telling your subscribers and your clients about the direction of the BRI in the post-BRF forum?
Yeah, I think starting from the forum itself, we were looking at two main takeaways. One is that, as you were saying a little bit earlier already, BRI is here to stay and it will continue to evolve. And the second main message that we got from it is that BRI, it always had a political backdrop despite its commercial nature. And that is a really good reminder of that is still the case. So going into how it is evolving, this is obviously a grand celebration. So there were new financing pledges that Chinese lending activities will continue to shape global development finance. And let's not also forget that, BRI is still in the party constitution, and that is not changing. But as you were saying already earlier, BRI is itself an amorphous term. It, of course, has a strong emphasis on connectivity and development finance, but in terms of how China is delivering those results will evolve. So there are more green elements that we were looking at. We're also looking at China having put down better safeguards already. They are going to continue to emphasize, all of these measures on integrity, on risk assessment. And we're also seeing more involvements of commercial banks, international financiers in the BRI initiative. And at the same time, we're also looking at Chinese companies, not just about lending activities, but also about direct investment overseas. And then the second sort of aspect of the forum that we were getting is how political it was. So one example that we got was that there was the discussion around the Trans-Caspian Sea network. So that, in our view, is actually a very high-risk project. It has been going around for a while now, but in general, there is a lot of risk associated with that. And there's still that political angle happening with BRI. But comparing to what we were saying a little bit earlier in terms of the evolution, in terms of risk assessment, these political side of things may be taking a backseat a little bit. But we're also looking at geopolitics, how it is affecting, participation of some countries at the forum. Obviously, in terms of BRICS, Brazil and India are not BRI members. And we are also looking at new rival initiatives happening there. And on a side note there was also not really any countries from Central and Eastern Europe except Hungary's prime minister. So looking at that angle, we're also looking at evolving participation of BRI itself.
So there's a lot there, and kind of honing in on some of the politics and geopolitics. You mentioned the Trans-Caspian Sea project. I wonder that was a very particularly kind of prominent one, as you said, and it's I think a lot of people haven't really been following that project. I wonder if you could kind of expand a little on what it is and kind of what the issues involved are.
Yeah, so in terms of this network, it has been called also the middle corridor. So essentially, when it comes to global trade, particularly between Europe and China, usually you'll be looking at a trade route from China to the Malacca Strait and then passing the Indian Ocean, passing the Suez Canal, and then to Europe. So that takes about 45 to 60 days. But whereas if you're through this middle corridor, via land, via Kazakhstan, and then going to the Caspian Sea, and then via the Caucasus country, then to Turkey or directly into Eastern Europe, this would be actually shortening the time by law. So it can be as short as 15 days. But the issues around that, and that has been the issue for a long time, is that you're passing a lot of countries where they don't necessarily have coherent trade restrictions. So there is a lot of issues, administrative bottlenecks happening there, there's a lot of red tape happening. But this initiative, alongside also the China-Europe Railway, has been something that China has been quite interested in, as we all know that China is looking for alternative trade routes, that does not really have to involve the Malacca Strait and the Suez Canal. And from that angle, there is the reason why there are some interest in that. But all of this involving a lot of countries that do not necessarily have very good track record infrastructure projects. They also need to harmonize their costumes and a lot of other things as well. So this is going to be a slow project, really. But in the medium to long term, there is still strong interest from China and to some extent from Europe as well, because they have to look past the existing trade routes with Russia.
Well, while we're on the topic of trade routes, I'd love to see if I could get your take on a couple different things. And again, this is a new one, so you may not even be familiar with it, but it is the Thailand overland route. Have you heard about this $27 billion project where they basically want to cut a hole through central Thailand Thai Prime Minister Srettha Thavisin was in Beijing at the Belt and Road Forum, and there was a famous picture of him on Twitter sketching out and putting a gash right between the north and south of Thailand at the thinnest point. And just as you pointed out, the goal for the Chinese is to try and eliminate the Straits of Malacca passage, because for those of you who are not familiar, the Straits of Malacca is a very narrow passage in Southeast Asia. And the Chinese are concerned that in the event of a conflict with the United States, the U.S. can choke that off. And a lot of Chinese energy passes through those straits. So the Thai Prime Minister is trying to go to Beijing to get the Chinese and, interestingly, the Saudis to kick in part of the $27 billion price tag to build this new canal that would potentially revolutionize trade by cutting out all of the Southeast Asia portion down by the Straits of Malacca and cut right through. So it passed through from Thailand through Vietnam and all the way up into China. And then at the same time, lots of talk about the Myanmar overland passage and the China-Pakistan economic corridor. So there's two economic corridors, the China-Myanmar and China-Pakistan. What can you tell us about these Asian corridors that the Chinese are quite eager to develop, but are also a little bit uncertain given the terrorism that we've seen in Pakistan and now the ethnic instability in Myanmar?
Yeah, there's certainly a lot of trade route discussions in that part of the world. The Thai project is certainly very interesting. So in the past, there were history around having a canal, sort of cutting through Thailand. And that has been proposed for years at this point. And the land bridge project essentially is sort of an evolution of that. But it is a very expensive project. As you were saying a little bit earlier, $27 billion that we're talking about. And
it's a huge amount of money.
Exactly.
That's a lot of money.
Yeah. And I think putting it in perspective, I think even the largest projects that China has been involved in terms of BRI, such as the gas pipelines, to Russia, that was not as expensive. So this kind of financing, if China is to justify, it probably needs a strong geopolitical angle. And we are not entirely sure how far China would go with that, because even though, yes, it would cut the trade time by a little bit, but it still passes through the South China Sea, it still passes through the Suez Canal. It's only cutting the Malacca Strait part of the alternative trade routes when it comes to alternative trade routes. But that being said, we are not necessarily, saying that it would never happen. I think looking at the domestic politics in Thailand, we are looking at a government that has some track record in delivering infrastructure projects. The Pheu Thai party in the past had done some of that. So in that context, it is still possible, but it's going to be a little bit of wait and see. And I think roadshow is going to start fairly soon, and we'll see how it goes from there.
So, as you also mentioned, green projects are becoming more prominent in the Belt and Road. But I was wondering what that new prominence means. This is happening now at a moment when the European Union and the G7 more broadly are pushing these comprehensive just energy transition partnerships with key middle-income countries. And they tend to be quite comprehensive, looking at trying to decarbonize entire economies. So are we seeing a similar kind of more comprehensive approach coming up along the BRI? Or when we're saying kind of green issues or green projects are becoming more prominent, is it simply that there's going to be more of them, more individual projects?
Yeah, I think one way to look at it is really from the supply chain angle. So whenever we're talking about green transition, we're not just talking about power projects, we're not just talking about electric vehicles, we're also talking about producing those things in the first place, and also going even upstream to minerals involved. So from all of that, we see that China's footprint in the Belt and Road, and particularly not just from the lending perspective, but also from direct investment perspective, we're looking at Chinese companies having a strong interest in expanding across all of these areas. So we know, for example, that how China has been investing in resource extraction across a wide range of countries. And I think, closer to home, that would be Indonesia, for example, involving in a lot of nickel processing and nickel mining activities. And then going a little bit further, down into manufacturing activities, we're also seeing a lot of activities happening as well. And this is in part driven by the supply chain diversification measures, in part, again, driven by also the tariffs imposed by the West as well. So there is a little bit of shift away from producing all of that in China and instead producing investing either in third countries, such as in Southeast Asia, or in places like Eastern Europe or in Mexico, where there are some, already in the free trade zones or in a free trade agreement with those major export destinations. And then finally going to the downstream part, you're also looking at many of these countries are themselves looking at green transition as well. So more installations from Chinese suppliers, more activities and cooperation with Chinese institutions in terms of how to green their supply chain and how to green their economy are also something that we are looking at as well.
All that activity downstream in the supply chain is part of the broader theme of Chinese companies looking to expand beyond China and going global. That has been one of the themes of the new BRI language that we're hearing, that the Chinese government, in many ways, the traditional players, want to step back a little bit. The policy banks have cut back their lending. We're seeing a lot more coming out of the Bank of China, ICBC, some of these kind of semi-state banks, and even more on the corporate side. You, in your report that you wrote, China Going Global Investment Index 2023, you mapped out a lot of those destinations. Let's talk about where that's going. Let me just quote from the report and get your take on it. You said that we anticipate strong momentum behind Chinese enterprises going global, with expansion set to be particularly evident in consumer electronics, IT services, that's data centers, e-commerce, gaming, and whatnot, telecommunications, renewable energy, and automotive products. I assume by automotive products you mean both cars and parts and motorbikes and trucks and all sorts of different things. And then you went on to say that market expansion opportunities are more prevalent in Southeast Asia and South Asia. Let's start our conversation there about where are Chinese companies going and why.
Yeah. The index itself, what we were trying to do is really to rank these destinations based on how attractive they are to Chinese companies. And in our view, the sort of three major reasons why Chinese companies go abroad are, around natural resources, around supply chain. So that includes setting up factories and, going for exports to third markets, and also in terms of market expansion. And one of the key parts is really how Chinese companies, facing a domestic environment that is maturing with income growing and, better technologies from China as well, how they have a strong incentive to go global. And particularly in terms of Southeast Asia, we think is probably one of the quote unquote biggest winners in terms of these drive for going global. I think there are many things that are actually looking pretty good for Southeast Asia and South Asia as well. The region is quite literally the fastest growing region globally. And we are forecasting faster growth in Asia than in Africa, for example. And in that sense, it is giving Chinese companies, quite a lot of opportunities to work with. And at the same time, we're also looking at Chinese companies avoiding risk. So it's not just about lending activities here. It's also about going overseas. They are worried about places with high operational risk, places with high financial risk. And in that sense, that China is essentially focusing on markets with high potential and lower risk.
And when you say South Asia, are you including India in that?
That is a very interesting part. We are probably not including India in that, but more for places like Bangladesh. So India is obviously a very big market with very, very high potential, but it has always been trying to keep China at arm's length. We think that actually the operating environment for a lot of Chinese companies in India is going to be not so great in coming years. So we have seen some regulatory actions against Chinese companies from Moody's government, and that is probably going to intensify in the coming years. And we don't really expect China-India relations to improve very much over the next decade.
So in relation to this kind of risk assessment, which are some of the countries that are emerging as maybe too high risk for Chinese companies? There was always this narrative in the past, particularly in Africa, that Chinese companies have relatively high risk tolerance, in part because they were also backed by Sinosure and other mechanisms. So kind of how is the deck being shuffled in terms of which countries are coming up and which ones are being abandoned in terms of risk assessment?
I think one of the more obvious examples closer to home would probably be Myanmar. So it is one of the countries that I've looked at quite closely myself. And when we are looking at some projects with geopolitical significance, like, for example, the railway project that's going all the way from Yunnan all the way down to the Indian Ocean deep sea port in Chaopiu. There are still some interest in that, but obviously in terms of security risk, that is really hampering a lot of progress happening there. And on the other hand, if you actually look at the business side of things, so before the coup in 2021, there were a lot of interest from Chinese companies and Western companies as well, setting up shops there, particularly in sectors like textile. And there was a high potential for the country because it has always been a country of high potential with a relatively large population. But what we are looking at is that business interests have quite dried up in the last few years, and we don't expect it to recover very significantly, not least because, not just about the operational risk and financial risk that we are touching, but also about how the export markets, like exporting textile to Europe, to US, those are also subject to potential sanctions in the future. So from Chinese companies' perspective, there are certainly some projects that might still attract geopolitical interest, but in terms of the commercial side of things and in terms of direct investment, that is probably one of the good examples where things are a little bit too extreme, so to speak.
Okay, Cobus, let me quote you now from the report. I think you'll find this very interesting. So the top 20 destinations with the most natural resource opportunities, according to the Economist Intelligence Unit, and this is the ranking after EIU factored in the risk, okay? So it's not necessarily the places with the most resources, but it's the places that have all the risk qualifications kind of taken into account. Number 1, Indonesia. Number 2, Australia. Number 3, Saudi Arabia. Number 4, the UAE. 5, Qatar. 6, Brazil. 7, Chile. 8, Kazakhstan. Number 9, Vietnam. And 10 is Iran. So Africa, not very well represented. Only Nigeria and the DR Congo are in the top 20. Interesting that the DR Congo is included in the top 20, given that it's a very high-risk place to do business. Philippines is also in there as well. So in terms of the overall ranking for investment destinations, and this, Chim, is what I'd like to get your take on. Boy, you're right. Southeast Asia is where it's at. Singapore, Indonesia, Malaysia, Hong Kong, Thailand, Vietnam. Those are the top places that you rank where the Chinese are likely to expand. And so maybe tell us a little bit more about the trends as to why Southeast Asia in particular is so popular with Chinese.
Yeah, we're certainly looking at sort of having a very integrated view. So obviously from a firm's perspective, if you're looking at, let's say, agriculture opportunity, you probably wouldn't be looking at Saudi Arabia when it comes to natural resources. But I think
you're looking at oil, right? I mean, that's it.
Yeah, it is looking at oil, gas, and probably in the future, some other sort of minerals as well. So in an integrated view, China is looking at, as a country, it is looking at all sort of natural resources. That mix has evolved as well. So in the past, you probably would have a little bit more coal involved, but these days it's much more about, natural gas in the future and also minerals that are very strategic to both digital transition and green transition. At the same time, agricultural commodities are still very relevant. And from that angle, that is why you see a rather interesting mix of in the list of where we still see that some countries, despite their high risk, they're still very much relevant to China. And I think in an integrated view, everything including market expansion, including natural resources, including supply chain opportunities, that is where as a whole, Southeast Asia stands out. So a lot of these countries, Indonesia is a very good example where you have a very big potential market, close to 300 million people. At the same time, you have good supply chain opportunities involving natural resources processing, but also in the future, potentially around different industries that China has a comparative advantage in. And then finally, also in different sort of natural resources. There's not to say that the Southeast Asian countries have no risk. I think in recent years, we have seen a rise in protectionist tendencies. So Indonesia itself, for example, has some protection tendency around extraction industries and want to localize more of that processing activities in the country. And that is certainly something from the country's perspective, exercising its own agency. At the same time, I think we're also looking at, just very recent weeks, Indonesia has restricted the use of TikTok Shop, which is the social media shopping branch of the social media app. And there is also looking at to protect local businesses. And we are seeing some Southeast Asian countries following suit as well, at least planning that.
Yeah, Malaysia is looking into doing the same thing, and even here in Vietnam as well. Cobus, I think this list should be very sobering to the African delegations who attended the Belt and Road Forum and who are looking for more Chinese investment. And there's always been talk for the past 15 years that there was this wave of investment that was going to come from China because of Africa's abundant, low-cost labor supply. But I think what we're seeing in this list is that the perception of risk, whether it's true or not, because we've talked about the unfair risk premiums that many African countries have to endure, whatever it is, Chinese companies don't seem that interested in investing large-scale in Africa.
Yeah, this was also, kind of backed up in the A data report as well. They were saying, like, even though there was more recovery to a certain extent in BRI lending, it's not going to Africa. Like, that kind of investment is not going to Africa. It's remaining quite low. So I think, kind of it seems overall that China is, kind of feels that there are maybe some limits, to what they can achieve in Africa, and that working there is hard. Chim, is that your impression as well?
Yeah, I think this is certainly of what we're thinking as well. I think just from sort of the economic growth forecast that we are looking at across different regions, Southeast Asia is certainly one of the fastest growing regions. I think that sort of give a lot of commercial entities in China some confidence that we would be able to, recoup our investment, recoup our lending there. And relatively speaking, at least in the short term, Africa would have a little bit more operational challenges. But we're still having a little bit of positivity over the medium and long term. I think we are looking at the African continental free trade area, slowly taking shape. And of course, in the short term, that would also mean a lot of transport and logistics investment opportunities as well. And we do see Chinese actors are still very much interested and still very much exploring opportunities. But it could take some time to materialize.
It's that transport and logistics, because the cost of moving goods and services and people is still very expensive in Africa. I'm so glad that in your report, you actually mentioned a key fact that a lot of people don't appreciate in the mining sector, in part because we're looking at Africa now a lot more because of the critical minerals that are mined there. You said China's expanded its reach across the continent's mining sector, though it still plays a minor role compared to regional giants and Western-aligned multinational mining companies, with incumbents likely to remain a dominant position. When people find out that the total output of Chinese mining activity in Africa only accounts for 6.7%, I think that they're rather surprised, because there's this perception in US and European policy circles that the Chinese are the dominant mining actors in Africa, and that's actually not true. When we look at critical minerals, that is a topic that everybody's focusing on now. Indonesia becomes very important. Australia becomes important. Then we have the lithium triangle, which is Argentina, Bolivia, and Chile. And then, of course, the Democratic Republic of Congo. How do critical minerals factor in to this new desire for Chinese companies to go global?
Yeah, certainly securing natural resources, that has been a key reason many Chinese companies went global. And then in the future, that is also going to be a main motivation as well. And we were discussing already a little bit how that mix has been shifting a little bit. And what we are also seeing is also how we are seeing in the more developed world, they are talking a lot about securing their mineral supply chain. At the same time, I think we're also looking at the many emerging markets globally, trying to look at how to make sure that they can find a way to leverage these trends. And I think we are a little bit mixed about how things would evolve from here, particularly because, when it comes to minerals, it is not created equally. There are some countries like Indonesia, which has a strong leverage in nickel, but that is not the same in every other mineral sectors as well. So it really depends on both the natural resources reserves in each country, but also at the same time, how the business environment in those countries will evolve and would be able to capture more of that value added.
So you mentioned also that the Belt and Road remains always, both business and politics. So I was wondering how you see, judging by, for example, by the Belt and Road Forum, how you see the political side of it evolving, and whether, China's kind of, political ambitions in, particularly in relation to the global south, are shifting.
Yeah, I think the fundamentals of BRI is still, the supply and demand dynamics are still very much there, right? So from the global south perspective, there's still very much strong desire for FDI and increasingly, particularly in industrialization related activities. And there's still very much strong need for infrastructure lending. And I think from the supply side, what we're looking at is that, perhaps the era of easy Chinese money, particularly in lending, is probably over. We are looking at official lending activities not really reaching that growth rate seen in the early days of BRI. And I think the A data report shows some fantastic data in that regard. And we are probably also not seeing lending activities going back to the level we saw in 2016. But I think the overarching message we were trying to see here is that the overseas investment footprint will continue to grow. So in that sense, we are looking at, Chinese companies probably focusing a bit more on a few countries with high potential and good relations with China, and those would be the drivers of overseas activities. And some strategic projects will still gain traction. So we mentioned a little bit earlier in Myanmar's ports, for example. Those are some good examples where despite all of these challenges, China will still get involved. But I think China's commitment in the future would be a lot more cautious overall.
We are recording this interview with you before the Asia-Pacific Economic Cooperation Summit is to take place in San Francisco. And it's going to be taking place all week right now. So as this show is broadcast, the summit will be underway. Again, we think Chinese President Xi Jinping will go. They've indicated that he will, and there will be a meeting with Biden. We got news this week that the Chinese and Americans are going to restore military communication hotlines, which is, again, a sign of progress. Also, Chinese Vice President Han Zheng was in Singapore and offered an olive branch of sorts, saying that he wants to repair relations with the United States and that the Chinese are open to doing that again. Any talk in that direction should be considered a good thing, given where we are and where we've been over the past few years and the steady deterioration in ties. With respect to the Belt and Road, and picking up on Cobus's question here, again, we don't know at the time of our discussion now if there's going to be a Xi-Biden meeting, but even if there is, that won't fundamentally change the nature of the relationship. How much does the great power rivalry come into the conversations about the Belt and Road? And when you were at the Belt and Road Forum, how much did that influence the tone and the feeling that's going on in Beijing today?
I think certainly that is probably an unspoken part of the forum, right? And we see BRI prompting some competition across the developed world. And, you were mentioning a little bit earlier about PGII, the Global Gateway. All of these initiatives really designed to counter China's BRI. And I think fundamentally, this is a good thing in terms of, for a lot of Global South countries, I think. So you're looking at more liquidity, more lending, and giving a lot of Global South countries more bargaining power when it comes to negotiating with their lenders, when it comes to finding new lending and new projects coming online. And so all that said, I think what China is trying to do with BRI, and we've been discussing it for a while now, is how it is trying to evolve to respond to all of these concerns raised by the Global South. So we're looking at how, in some cases, it's trying to balance the demand on ESG at the same time maintaining that efficient delivery of projects, or at the same time also increasing, investment in green technologies, in digital technologies, and whatnot. So all in all, I think this is probably the unspoken part, but it's still very much manifesting itself in the discussion of BRI.
So, we've raised a lot of data points, and the BRI remains, such a kind of a big thing, kind of that is very difficult to kind of get a bead on it. For, kind of people who are interested in it, and particularly interested in how it's evolving, what would be some of your maybe top three kind of takeaways for them to keep in mind as they look forward into the future of the BRI? What are some of the kind of main mega trends around the BRI that you're identifying?
I think first and foremost would be looking outside of the official institution. BRI itself has never been an overarching initiative coming from one single department in China. It has always been driven by a diverse range of actors in China. And moving forward, we are going to see more Chinese companies going out, not because of the directive of the state, but because of their own commercial interests. So I think it's very important to actually look at the Chinese companies and how some of the Global South countries would be interested in attracting their investment quite directly by improving business environment. And then on the other hand, we're also looking at how China is maintaining, sort of managing the debt distress. I think that is the second area to look at. This is going to be a very painful process. We are looking at a growing share of China's lending activities really going into maturity, I think as pointed out by the A data report. And there's really no winner here. We are looking at, China itself is trying to learn a lot from all of these lending activities it's done over the last decade. But we have seen some positive developments in the case of Zambia, and we're probably also expecting a little bit of concessions happening in the coming cases as well. I think one test case is probably going to be Ghana in the coming few months. And then I think the final aspect I would say is also looking beyond just China and the direct interaction with Global South. I think there's a lot of interesting things happening in terms of how the BRI's interaction with global actors and how, for example, the rival initiative happening, what are the opportunities happening for the Global South as well. So I think we pointed out Indonesia quite a few times and probably repeat it again in terms of how it is able to navigate that landscape with some agency and with some sort of direct actions in sort of impacting the investment decisions and lending activities from China and other lenders.
Yeah, in terms of the diversity of actors, one other point that I think is worth mentioning is that it's not only in terms of the private sector, but we're seeing a lot more state actors at the sub-regional, subnational level. So, for example, Chongqing just held an ASEAN forum. We've also seen Shandong province doing a lot more outreach into Africa. So look for things at the municipal and the provincial level. Those guys are really starting to get a lot more active and to engage in their own trade initiatives. A lot of it BRI, some of it not BRI. Again, in Kenya, we had a Shandong trade fair, and Shandong has been particularly active, which is very interesting. So something to keep an eye on. The report is China Glowing Global Investment Index 2023, the Belt and Road Initiative's second decade. It was written by Chim Lee and the team at the Economist Intelligence Unit in Beijing and around the world. I presume that you guys kind of contributed to this. It's a fantastic report. It's actually free. You can go to the EIU website and download it. You got to put a little bit of your personal information in. Probably they're going to spam you for the next 6 months to buy some of their other stuff. But hey, we all got to make a living, right? And so Chim, thank you so much for taking the time to join us. We'll put a link to the report in the show notes, and we really appreciate all of your fascinating insights. And we'd love to have you back on the show again to update us on how things are going.
Yeah, thank you very much.
Cobus, just thinking now back to the past few weeks of our discussions about the Belt and Road Forum and about the future of the BRI, putting together the interviews with Amar and the A data report, and now with Chim and the work that he's doing at the Economist Intelligence Unit, you really start to get a more holistic picture of where this thing is going. First and foremost, it is not dead. It is not dying. And anybody who says it is has no idea what they're talking about. And you see this consistently in the US and Indian media in particular. So just discount anything that says the BRI is dead. It is changing, to be sure, but what we've heard is they are managing the debt distress issues. They are retooling this whole thing, and they're going out and they're staying aggressive. And so in one sense, I think there's going to be a lot of competition with the US and Europe, but at the end of the day, after these conversations, my take is I just don't think the US and Europe are wired for what the Chinese are doing in this space specifically. Not for everything, but just in this space.
Yeah, I mean, it's clear that China knows that working with the rest of the world on infrastructure-related issues and all of these other kind of connectivities that particularly strengthen Chinese companies, or sectors where Chinese companies are active, like digital and green cooperation, that kind of continuing that cooperation is key to its larger kind of ambitions in the world. So it's interesting that they're kind of re-energizing it in this way. And I agree with you that I think there's certain limitations in what kind of the G7 can like on which level they can compete with it, unless they are willing to go into quite significant kind of reforms on their own side, which I don't think they're particularly in the market for. So, so it'll be interesting to see how this kind of competition develops over the next while.
Most importantly, I just don't think there's a political appetite in either the US or Europe right now to ship billions of dollars to build roads overseas in poor developing countries. I just don't think the mood of the people is there. They don't see that as a net win for themselves. In fact, the arguments we're hearing in the United States about the war in Ukraine is that we have falling apart infrastructure, our schools are not strong, cost of living is too high. Why are we spending billions on wars in Israel and in Ukraine? Right now, everybody's kind of backing Israel, but I would imagine in 6-9 months, that too may come under pressure. So fundamentally, getting the private sector to do all of this is going to be extraordinarily difficult. I was also on a call with a very prominent Africa-US analyst who has worked in the US government at very senior levels. And they said something very interesting during this presentation, that the United States has got to get out of the habit of making all these big announcements, big MOU announcements, press releases, big numbers like $600 billion for Global Gateway and PGII, and actually start delivering. And this is one of the key advantages of the Chinese, is the fact that they can actually move quickly within a single electoral cycle of a president or prime minister. That's key. Within a 4 to 5 year period, they can bring an infrastructure project to bear. That's the ultimate advantage I find, is that ability to actually get on the ground and build things and deliver them. That's been an area where the US and Europe, and even to some extent Japan, have struggled.
Well, they've now moved forward to announcing specific deals,
which is progress.
Yeah, the EU with Namibia and the US with Sri Lanka on a new container facility at Colombo Port. So let's see how that goes.
And the Libido Corridor, they're moving forward with that as well. You're right. Let's see how that goes.
I mean, so it's interesting that they're moving forward. But yes, I think just the speed with which these projects are delivered from the Chinese side remains a significant challenge, I think.
Well, last week you wrote about the Sri Lanka port deal that the Americans did with the Indians. What does that tell you about the American strategy?
Well, they are working with Indian and Sri Lankan conglomerates to build the facility. So I think it's an acknowledgement that the US isn't necessarily the strongest kind of player in the hard infrastructure delivery, kind of contracting game. Of course, there's huge contractors in the US, but this isn't particularly something that they focus on. So what I found interesting in all of this is like it's quite vague where the financing is going. Like even in the official announcement, there was one mention in the DFC announcement that it's a commercial loan or a loan to corporations, I think was the language. So I assume it's probably going to go either to the Indian or the Sri Lankan Port Authority or something. It's difficult to say, because they also said it's not gonna add to sovereign debt. And I was like, how is $500 million not adding to sovereign debt problems in Sri Lanka, which already has a lot of sovereign debt problems? So I'm sure maybe there's a way. Like what was interesting for me that there wasn't specific language about like how this is going to work. But yeah, like the debt issue is a big thing to keep in mind, kind of because it's also something that the Chinese are increasingly pivoting to try and deal with.
Okay, I am smiling right now as you say this, because I'm thinking about these loan contracts that the United States is entering into with these various stakeholders. And if they don't publish those loan contracts for everybody to see, every term, every detail, every inch of the contract, to counter what they've said about the opaque lending practices of the Chinese and the secrecy and the non-disclosure agreements, right? So it's easy to say that kind of stuff when you don't have a competitive alternative. Now that the Americans are out there issuing loans, let's see what their standard of transparency is. This is going to be super interesting. And already on the press release, it wasn't very encouraging, is what you're saying. That we don't quite know where the money's going. We don't even know necessarily where the money's coming from. It's from the DFC. Is it all coming from the DFC? Probably. But let's see where these loan contracts show up. And one of the things I would like to do is get a loan contract and maybe on our YouTube show it to everybody. And let's compare a Chinese loan contract with a new DFC loan contract. Wouldn't that be fascinating?
Yeah, that'd be great.
And let's see if the U.S. is up for all the talk, because, man, if they have a non-disclosure agreement in any of these contracts, oh, boy. If I was the Chinese, I would take them to town for that. I mean, I would just rip them a new one saying, wait, you have a non-disclosure agreement in your loan contract? And you have opaque lending practices, and we don't know where it's going and what the interest rates are and the terms are? And then pretty soon we're going to have an aid data dump of American loan contracts. Go figure. It's a topsy-turvy world that we're living in these days. So, okay, let's get, a final deep thought from you about the Belt and Road 2.0, where it's going in the next 10 years. We're going to move on from this subject now for the next few weeks, but I do want to get your take in terms of where you think this is going.
Well, as always with China, there's a lot of very big announcements and everything is kind of couched in these very lofty terms. And then it's very difficult to say what any of this actually means. But one of the things that was interesting for me, just on a very overarching level, is the difference in tone between what was seen at the Belt and Road Forum and what is the kind of vibes that are coming out of Europe and the US at the moment. Even though Europe and the US are moving forward with some of these projects, it's coming against the background of an impression that the societies themselves are closing, that they have a limited interest in the world, and that they're kind of exhausted by things like migration, very negative perceptions of migration in Europe, even though there's also huge kind of labor gaps that need to be filled by migrants. But migration is so toxic that even in the few months in Germany that I've spent in Germany now, I've seen a market kind of right-wing kind of lurch in German politics, kind of around this issue, even quite left-wing people saying quite right-wing things around migration, even though everyone knows that Germany is actually in serious need of a lot more migrants. I think there's a certain kind of overlap. I mean, the US is different, but I think there's a certain overlap in the US as well. So it was interesting for me to look at the Belt and Road Forum, and it's all friendship. We love the world, we love all these countries. We're all going to be working together. Who knows? I mean, China is a very close society. Who knows how much of that actually is real? But it was an interesting tone to strike. It's a very kind of unique tone to strike at a moment when the G7 is go away and get off our lawn, so that's, it's just interesting.
Yeah, but it's funny. I thought you were going in a totally different direction with that, because I thought you were going to say that about the Chinese. That the Chinese are closing themselves off to the world. There's fewer academic exchanges, fewer journalists that are there, more nationalism.
Yeah, they are. Of course, all of these things we've covered all of these measures of closing off, kind of at the same time. But what I'm more specifically looking at is particularly the messaging that's going directly to the global south. On the Chinese side, the messaging is a lot more. This is an open, all kind of open partnership and we're interested in working on a bunch of different things with you, across many decades. On the European side, when you look at the kind of just energy transition partnerships and Global Gateway, obviously there is engagement with it, but it all comes with a strong dose of, we're going to be working with you to reform your local regulatory, kind of environment, to de-risk it for European companies. Kind of everything is quite limited. Everything is very much about, we hope you'll be able to kind of jump through these hoops. We'll be watching, kind of it's more that kind of vibe. So, kind of it was interesting, the kind of expansive kind of view that was coming out of the Belt and Road Forum.
And let's not forget that China is the ultimate anti-immigrant country, right?
Yes, of course.
So as much as the Europeans want to keep the folks from Africa and the Middle East out, China does it much better than anybody else. There's virtually no immigration into China. It's very small, whatever there is. So they get a pass on that, which, okay, fair or unfair, that's the way it is. Okay, well, let's leave the conversation there. Cobus, very exciting that the next time we speak with you, you'll be back home, reunited with your family in South Africa, free of the crappy European weather that is descending on you. And we're looking forward to having you back in Johannesburg as of next week. For everybody else, you make sure you tune into our Friday podcast on Africa issues. And also, we cover this stuff every single day, just deeper, more nerdy than anything you could possibly imagine. So if you are interested in these topics and themes, you're going to want to subscribe to the China Global South Project. Go to ChinaGlobalSouth.com/subscribe. Your subscription helps keep these independent voices alive. And as we've been talking about the past few weeks with the demise of the China Project, this is a very precarious business. If these voices that you hear from Cobus and from Géraud and from Johnny and from the team at the China Global South Project, and I'm also going to give a shout out to The Wire China, the China Media Project, any of these independent media channels, if you value them, you need to support them. And us too, I'll say. Because if you don't, that's it. And we were talking today, Cobus, that if we go out of business and if The Wire China goes out of business, now that the China Project's out of business, the market isn't primed for replacements to come in. There's not a line of people behind us wanting to do this, right? The people coming into the space to fill the voids will hit to the poles, to the more extremes, to where the algorithms are going to reward them. And so this is urgent that independent media stays alive. And so yeah, I want to make that pitch that this is important work. And again, if you don't support us, I hope you'll support The Wire China. I hope you'll support some of the other independent media that's out there. But I'd love it if you gave us a try. Again, ChinaGlobalSouth.com/subscribe. If you're a student or teacher, email me at eric@ChinaGlobalSouth.com and I will send you links for a 50% discount. That's just $10 a month or $99 a year for a subscription. So very fairly priced. That'll do it. I'm Eric Olander in Ho Chi Minh City, and for the last time, Cobus van Staden in Berlin, next week in Johannesburg. Thank you so much for listening. We'll be back again with you next week.
The discussion continues online. Follow the China Global South Project on Twitter @ChinaGS Project and share your thoughts on today's show, or head over to our website at ChinaGlobalSouth.com, where you can subscribe to receive full access to more than 5,000 articles and podcasts. Once again, that's ChinaGlobalSouth.com.